Mark, let's talk about your inheritance and the tax man. What tax implications do I need to worry about if I've been given an inheritance?
If you've been given an inheritance, you have actually no tax consequences. The only issue I see, if it's a substantial inheritance, you will have a bunch of money leeches coming after you, being family, friends, investment advisors, and you'd want to park that money for, let's say, 6 months in the GIC and tell them they can't have it.
What about the person who's arranging their estate? What taxes should they be aware of?
When you die, there's something called a deemed disposition of your assets at fair market value. So if you don't leave the assets to your spouse on which there's an automatic rollover and no tax issue, you're deemed to sell those assets at fair market value. So for example, if you have a cottage that you bought for $100,000 and it's worth $400,000, you'll have a $300,000 capital gain on your last return, and the tax will be due on that even though you haven't necessarily sold the cottage.
So you could be leaving your cottage to your kids and also a big tax bill.
Exactly, and therefore you should be planning beforehand, possibly life insurance, possibly gifting assets earlier and absorbing a smaller tax liability.
All right, so when planning your will, be very cognizant of the tax issues you'll be leaving behind as well as who gets what.
Exactly, cash flow and tax issues.
Thanks, Mark.